Welcome, everyone. So we're going to get started. We're already 3 minutes into the webinar, but we're good. Everything is in order, so we're going to launch this webinar. Good morning, good afternoon. I'm Adriana Salazar, Program Officer for Water and the SDGs at the French Water Partnership. On behalf of the French Water Partnership, I'd like to welcome you all to today's webinar on blended finance for water and climate when theory meets practice. I'd like to first of all welcome our speakers and panelists. Thank you very much for joining us today and for accompanying us throughout this process these past few months. Our speakers and panelists from the French Water Partnership, OECD, Mille et Une Fontaines, Safi Sana, the Nature Conservancy, the French Development Agency, Convergence Finance, the Union for the Mediterranean, the Global Environment Facility, and Waterpreneurs. I'd also like to welcome our audience members, wherever you may be. I see that we have on our different platforms quite a few people already online. I'd finally also like to welcome the members of the French Water Partnership that are joining us today. And last but not least, the audience members that may be following us through the Union for the Mediterranean's website, who is also streaming our webinar today. So before I pass the floor to our first speaker, I would just like to mention a couple of very quick elements. So today's webinar is structured around a short introductory section, which will be followed by 3 case studies, followed by a moderated roundtable, and we'll finally close with an audience Q&A. So for those of you that are logged on via GoToWebinar and YouTube, please log your questions in the chat throughout the webinar, if possible, specifying who your question is directed to. For those of you logged on via GoToWebinar, please feel free to log your questions in French, as they will be transferred to me in English later on. For technical reasons, those of you that are logged on through GoToWebinar and YouTube, you will not be able to ask questions orally, so this is why the chat is important. For those of you logged on via Zoom, you will be able to ask questions orally, but please also log them in the chat first so we can get to them in due time. Finally, I'd just like to mention that this webinar was originally due to take place as a session at World Water Week 2020, unfortunately canceled due to COVID-19. We hope to resubmit it to World Water Week 2021, so we hope to see you there, those of you that may be joining us. So without further ado, I would like to pass the floor to our first speaker, Marilov, Director General of the French Water Partnership, who will welcome us with some very brief introductory remarks. You have the floor, Marie-Laure.
And welcome all once more. I am Marilov. I am the Director General of the French Water Partnership, multi-stakeholder platform gathering about 200 public and private French water actors, all working internationally. Our members, active across 6 categories of actors, work together in 4 core areas that are key to the sustainable management and governance of fresh water. Water and the SDGs, water and climate change, freshwater biodiversity and nature-based solutions, and finally, WASH in crisis and fragility situations. The multi-stakeholder and cross-cutting approach to water governance and management is at the heart of the French Water Partnership. And it is with the same spirit that we have aimed to approach the topic of blended finance at the service of water, sanitation, and the SDGs, with a focus on SDG 6, of course, and water-related targets, and in the global context of climate change. We know well that public resources will not suffice to meet the investment gap required to achieve the Sustainable Development Goals and the Paris Agreement. The financing shortfall is estimated at between 2.5 and 3.3 trillions US dollars annually, which works severely against us if we are to achieve if we aim to achieve the Sustainable Development Goals by 2030. Now, definitions of blended finance may vary in scope, for instance, between the definition of the OECD and the definition of the Addis Ababa Action Agenda. But they and the international consensus all point towards the same direction, which is that by mobilizing private capital in emerging and frontier markets where public funds are limited, blended finance has proven to be an important means to bridge this gap. And blended finance can also help to enhance the quality of partnerships between the public and private sectors by maximizing synergies, for instance, and setting clear targets towards sustainable development. It is our hope that today will help shed light on the role, the challenges, and the potential of blended finance to address water and climate change related challenges. For this, we have aimed to bring together a diverse cross-section of actors, from organizations operating in the policy and regulatory arena to implementers of funds, doing so through field and technical assistance projects, to knowledge brokers and facilitators working on the enabling environment for blended finance, and at the intersection of the public and private spheres. In time for World Water Week 2021 next year, we hope to invite more capital providers and private finance players to join us in this conversation, as their insights and experience are essential. I look forward to today's discussions. Thank you.
So thank you very much, Marilov, for your opening remarks. We are going to move on to our a very short introductory presentation by Kathleen Dominique, lead for financing water at the OECD.
Kathleen, we can't hear you yet.
I think Kathleen is having an issue with sound. Let's see if perhaps she can call in. Yes, we're not. So apologies for this little mishap. We'll have Kathleen back towards the end of the webinar. So we're going to move on, and we're going to start for now with the three case studies that are foreseen. We have, yes, three case studies. The first one will be presented by Mr. Julien Ancel, CEO from Mille et Une Fontaine, and Art van den Beukel, Managing Director at Safi Sana. They will be talking to us about how a blended finance can be leveraged to scale up WASH social businesses.
Adriana?
So, exactly. Art and Julien, I give you the floor. Thank you very much.
Hello, everyone.
Hi, good. So Julien and I agreed that I would kick off in this joint presentation.
Wonderful.
So thank you very much, and very interesting, and also very interesting that we are starting already that soon. My name is Art van Beukel. I represent Safi Sana, and again, I'm doing this jointly with Julien Ancel, of the CEO of 1001 Fontaine. So I think one of the interesting things for us is that we have this floor, apart from the more theoretical stories, also to hear from some practitioners. And I think both 1001 Fontaine and Safi Sana have an interesting view on that. Although we have about 15 minutes to talk about it, we still try to keep it very basic and simple, but give you a bit of an insight. And I think the interesting thing here is that our organization, we operate, let me start my video here as well. We operate in a slightly different but a very connected market, which is the drinking water and the wastewater sector. And so that on the one hand is different, but if you look at both our cases, which we will again compare in this presentation, they have also a lot of similarities in operational, in the growth of the business, and how we intend to finance both the operational cost, but also the scaling of the organizations. And blended finance is for both of us a very interesting and important tool. So we will dive a bit deeper in that one. So here on this slide, you see again the two cases. On the left, the company I represent, Safi Sana. As it writes here, it's a circular model for wastewater, but actually more specifically, we deal with fecal sludge. And the picture that you see here is the operation that we have in Accra, in Ghana. And well, the reason why we started this in the first place is that utilities and governments have, in developing countries specifically, they struggle with treatment of wastewater, and to do it more effectively and at an affordable cost. And for fecal sludge, that's a huge problem. Still, 80% of wastewater is not being treated worldwide, and so it's a huge issue that is causing a lot of health problems. And also, of course, issues with the environment. And how we wish to deal with that is that for us, fecal sludge can actually be seen as a resource. And in this plant, we use the fecal sludge in combination with other organic waste streams to produce electricity. And biofertilizer that we sell, the energy we sell to the grid, and the fertilizer sold to farmers. And through that, we are able to cover the cost of the operations, including the maintenance. And so Safi Sana is actually an alternative utility that offers its end-to-end services to the government. Yeah, we were founded in 2010. So again, like I said, we built our case in Ghana, and we've been operational now at a large commercial scale for 3 years. And we are looking at expansion in other markets, both in Ghana and other countries. So here, I think, and Julien will also talk about his version, but here you see the structure of the cost, and looking at operational cost, the OPEX, the CAPEX, the capital expenses for the project, and the cost that may be related to the financing structure. And in this example, you can see that for Safi Sana, covering OPEX is one of the first conditions. And we can do that because we produce the fertilizer, we produce the electricity, and we charge a dump fee on the site through which we are able to cover the OPEX. And as you can see, in order to finance the project cost, we need additional sources, which is the public service fee that is paid by the client, by the government in this case. Of course, assuming that there is no tender in place. Okay, Julien, I think, can I give the floor to you so you can talk a bit about your business?
Yes, thank you very much, Art. So 2001 Fontaine, we're present in Cambodia, Madagascar, Myanmar, and Vietnam, and we're active in the space of safe drinking water. So our mission is to enable vulnerable populations in those countries to produce safe drinking water in a sustainable manner. So we do it through a water kiosk franchise system, which is basically a decentralized water plant unit that is being set up, implementing inside the villages, the communities. We have today about 250 of them in Cambodia, and they are run by local entrepreneurs that have been trained, supported, and coached by our teams. So by having the decentralized unit within the villages, we enable to have the distribution cost very low, and therefore to provide an affordable price for the communities. And this price will cover for the operational expenses. And all the profits that are being done, and we apply the social business principle, will be reinvested for impact. So today we have a proven operational model, and we are impacting the health of population. So 800,000 people today, with a decrease of absenteeism at school of 75%. We are also having an impact on the local livelihoods and economy with more than 800 sustainable jobs created. And we are also impacting the environment through an environmental friendly approach based on solar energy and very light treatment systems that are actually also very resilient to climate change. And today we are carbon credit positive, and we are generating 10,000 tons of carbon credits every year. In a nutshell, the 1001 social business approach. Thank you.
Okay, if we move to the next slide.
Next slide.
Yes, please. Actually, so what we try to show here is, again, let me start as Safi Sana on the top. The very important critical milestone, of course, for scaling is that you are break even. And I think in that respect, 1001 Fontaine is a bit ahead of us. Safi Sana expects to be break even next year with the operations in Ghana, but we're moving in that direction. And of course, once we are there, it's the time to scale. And in that regard, we need blended finance to do so. So comparing the current situation, or how we built the current situation, and how we intend to scale further. Again, looking at the CAPEX for our program was subsidized partly by, to give you an example, African Development Bank and the contribution of Dutch government and our impact investors. And looking at the OPEX, again, producing fertilizer and electricity, the byproducts and the tipping fees will allow us to run break even on the operational side. And again, that should include the cost of maintaining your system, because otherwise there's no sustainability there. And with our current plant, we can impact around 50,000 people on a daily basis. And so then if we look at the scaling opportunity that we see, again, assuming that the OPEX can be covered from the revenues, then the CAPEX is a different issue. And again, assuming that there is no tender in place, for example, by the World Bank or any other IFI, then we want to take the lead. We are looking at a blend of both grants and loans. grants are still possible, but we don't want to assume that grants will be the future. There's no way we can do like 100% grant scaling. And that's why now we're looking at that blend. And the interesting thing there is that if you look at the finding the right blend, you need to look at different parameters. And so if looking at IFIs involved, or your funders involved, us as an operator, and your clients, for each there's a different return to be expected. And the trick is to find the right return. So for the investor, it's the cost of capital. The client wants, of course, the impact, and then to minimize the cost. And for us, an operator, we need to make a certain level of profit. So there's not one size solution that fits all. So currently in Ghana, we have the experience on how to finance your operational part. And for us, the things are now, the discussions are ongoing with future investors to find out how that works. So the examples that we can give are now for Mali, for example, where we are preparing a case with the local utility. We are in discussion with the World Bank and our own investors on how to build that ideal blend. But also in Uganda, we're doing a similar study. And with that investment, we can reach high impact. And we expect to have 2 bigger plants operational by 2025, reaching, as it says here, 500,000 people. Yeah, so I think, Julien, interesting to hear your side of this.
Yeah, so we're also in the same situation, which means that now that we are reaching break-even, we are in a position where we can leverage blended finance to scale and accelerate our growth. So in our case, the historical model is that the capex were subsidized by grants. So we've raised about 15 million euros of grants over the last 15 years through institutional donors, development agency, private funders, and foundations to reach about 800,000 beneficiaries in Cambodia. And today, 1,001 Fontaine in Cambodia, we are the largest drinking water producer in rural Cambodia, and we cover about 25% of the country. So the fact that we are now reaching break-even is basically saying that we are moving from a subsidized point of concept to a sustainable and scalable model. And now the self-finance of the growth is defining a new bold ambition in Cambodia, because our objective is to triple our beneficiaries by 2030 and become sort of a showcase rural water cure social business in the world. So we have very high ambitions for Cambodia, and we have a strong investment plan of $7 million for the next 5 years. These 7 million will be used not only to launch new water production units, but also to build the capacity and to continue building the capacity of the team and launching new innovative programs. So it's important to envision that when we talk about growth, it's not only just a new physical asset, but also the capacity building part is very important. And the way we are breaking that down is basically this 7 million, with half of them, 3.4 million, will be through loans. So we will emit some debt, 2.7 million subsidies, and 1 million, which will be profit reinvestment. So it's definitely what you would call a blended finance and a mix. And that should enable us indeed to triple our impact by 2030 and 2025, reach 1.5 million beneficiaries. Thank you. So the idea here, and I will speak on both voices, because when we shared our journeys with Art, we actually found out that we actually living the same experience. What we wanted to share with you is basically what are the challenges we are confronted with when we go to the market to find for blended finance mechanisms, and what we would see and what our humble suggestion would be, especially towards social businesses, social enterprises that are looking to get into the market, and what are the success factors and the tricks. And again, Art and myself will be happy to continue the discussion with you guys after this call. But basically, we started our fundraising campaign beginning of the year. We had the support from Accenture to develop a very, I would say, solid business plan. So we were looking out of those $3 million of debt to a blended rate of 2 to 3%, and we were able to provide any guarantee. So obviously, there was a very warm welcome on our project because it has a lot of operational credibility. The business plan was seen to be very consistent, but we faced many hurdles and challenges when we were looking for money. And the first thing we discovered is that there was no real off-the-shelf financial product when we talk about loans of this level. And the main thing that was difficult for banks or investors to look into is that it was very difficult to assess the risk level, basically, and to invest on a product that doesn't offer any guarantee. So usually traditional banks are asking for strong guarantee. in our cases, we don't have any asset to put on the table. So this was the first difficulty. And the second one, and I will always remember, some of our partners told us that your project is great, but you're in a position of the Death Valley. And Death Valley means that you are too big to look for subsidies now, but you're too small, important funding and investment from development agencies, which are looking at tickets closer to $5 to $10 million. So your project is great, but there's nothing much we can do to you. So we had to really search for ourselves, and the ecosystem of investor is very fragmented. So there are many niche players that are willing to invest in those projects, but it's really a strong effort on our side to find them. It was very difficult to identify the right person to talk to, and therefore it's taking time, transaction costs, and it's delaying basically the scale up. So in a way, we had really to start on our own, and the effort and the investment required to manage a fundraising campaign of this nature had nothing to do with what we had seen before. However, we believe that if you have the right case, and if you I would say activate some of the tricks, you can succeed. The first one is obviously to have a solid business modeling. That seems to be very plain, but obviously having strong details about your business plan and also doing all the sensitivity analysis with strong pedagogical work, because you are talking to organization institutions that will not that are sometimes difficult to apprehend the balance between impact and economy. So a lot of pedagogy has to be done to make sure that people understand the language and the nature of what you're saying. The second factor for us is to try to integrate a top-tier bank. So we had the chance in France to make a deal with one of the biggest French banks that is going to provide us a loan of close to $1 million, a little bit less. And so because we have that, now we have a lot of credibility toward other players in the market, because if one of the big top banks is helping you, is supporting you, then obviously that gives a lot of credibility. The third thing is to pitch to a wide audience. By that, we mean that you never know who's going to support you in the end, and the people you think about in the first place might not be the one. And another example is that we never thought about going to crowd lending platforms, and actually some of them will be very receptive to your proposal. So don't hesitate to speak your voice loud. And probably the most important one is mobilizing our strategic historical partners, because they will be the one that will open the doors to new investors. They will be the one that will agree and understand the logic of combining grants and debts, because many people just don't see how you could, I would say, combine those. But your strong ecological research partners are doing that, and they also, in some case, can support by de-risking the investment. So going to the new funders and investor and saying, okay, you are going to invest in this company, you're going to make a loan, we guarantee your investment. So this is something that you can happen. And the last part is obviously to try as much as possible to keep to make the people sit on the same room, because you're talking to very different types of investment banks, private foundations, institutional donors. So what Safi Sana did last year, which I found very interesting, is that they basically organized a few workshops by sitting everyone on the table. And now everybody's talking the same language, and is created sort of a committee, a campaign committee, and everybody is now in the same page and working together to support Safi Sana or 1001 Fontaine to raise the money. So you need a strong effort to, I would say, get through this mechanism. But by relying on your historical friends, I think they can help you a lot to accelerate your campaign. So just to conclude, I'd say that philanthropy, which is basically the basis how we started, is very important for us to reach operational maturity. But when we talk about leveraging, scaling up, accelerating, blended finance is the solution for us. So given the transaction cost, the effort that we can, and particularly investors, is to work more together, coordinate their efforts, because we've seen that it's very fragmented. And by doing that, by having more, and I think this PFE session is very important for that, by increasing the advocacy and the joint work, we definitely think that when it comes to WASH, and more financial instruments for projects like ourselves to develop. Thank you very much.
Thank you very much, Julia and Art, for this double experience. So it's great that we got two for one. This wash-oriented experience. Now we're going to move to a completely different area, if you will. We're going to move to nature-based solutions. So to how blended finance can be applied to nature-based solutions to achieve water security. We'll be focusing on the case of Cape Town and Sophie Trémollet, Water Security Director for the European region at the Nature Conservancy, will be sharing this experience with us.
Thank you, Adriana. I hope you can hear me as you pull up the presentation. Thank you very much for the invitation, and also to the earlier speakers for their very practical and action-oriented presentation, which I enjoyed very much. As you said, Adriana, we're going to shift gear and look at the need for investment in nature-based solutions in the water sector. I work for the Nature Conservancy, which is one of the leading global conservation organizations with a mission to protect the lands and waters on which all life depends. So we quite a large organization with 4,000 staff working in 72 countries with a strong base in the US, where the organization was born originally. But what we bring is that we're able to share experiences across the different regions in which we operate. For example, I work in Europe, but I've been very closely involved in the development of the work that I'm going to present in Cape Town with our South African colleagues. And the priorities on which we work can be summarized as working on climate mitigation and adaptation and biodiversity protection. So we're really at the nexus between biodiversity and climate, which is now rising to the fore as motivating action in environmental conservation. Next slide, please. So one of the areas that I work in particularly is looking at how we can mobilize greater investment in nature-based solutions that can help address multiple water security challenges all at the same time. Here you are seeing a list of the potential nature-based solutions. What are we talking about when we talk about this? And we're talking about interventions in the landscape, but also changes in agricultural practices that can restore ecosystems and protect ecosystems, and at the same time generate benefits for water security. These benefits can be measured in terms of surface water quality, groundwater quality, reduction in floods, or alleviation of the impact of water scarcity by recharging aquifers, for example, or improving water flows. Next slide, please. So these nature-based solutions generate water security benefits because that's what they're designed to do in the first place. But what is interesting is that they generate also multiple co-benefits in terms of climate change mitigation and adaptation. So helping to sequester carbon, for example, if we are planting trees that can limit soil erosion in turn and therefore reduce the sediments flowing into the river. So we are generating all these benefits at once with one single nature-based solutions. They also help, of course, with biodiversity conservation by protecting and expanding natural habitats and limiting the expansion of invasive species, which is one of the key cases that we will focus on with the example of Cape Town today. And they also boost human health and well-being by reducing exposure to polluting substances, as well as creating green jobs, particularly in rural areas where they tend to be very much needed. So thereby promoting urban-rural solidarity. Next slide, please. As a result of generating all these multiple benefits, these, I would say, create a specific challenge for their financing. We all know that financing the water sector is complicated, but in some way, financing nature-based solutions can be even more complicated, although it generates a number of opportunities as well. This is because these multiple benefits that are created accrue to different types of beneficiaries. The water service providers, of course, stand to benefit. For example, if they invest in protecting the catchment, they can reduce the sediments flowing into the river and therefore flowing into their treatment plants. So it can result into a reduction of their costs. that can also benefit the energy producers in the case, for example, of hydropower plants, can of course benefit the large water users, which are also looking to tackle water quality and quantity issues, but also local governments, the general public, workers benefiting from green jobs, and of course the environment, both locally, because many of these nature-based solutions are very local, but also globally if we're talking about carbon sequestration and mitigation. The fact that they generate all these different benefits means that they can pay in different ways. So in order to package a funding package for these solutions, we need to be looking at multiple revenue streams, which can include tariffs associated with the services. For example, if a water company benefits from these investments, they might be willing to dedicate a portion of their tariff to investing in these activities. It may also be payments for ecosystem services, which are payment going to the implementers of the nature-based solutions, such as farmers, for example. Could include public subsidies, and in fact, we find that a lot of the NBS at the moment are funded by public subsidies, including a whole range of subsidies, such as farming subsidies. A new type of revenue streams would be credits in order to capture these other benefits which are generated, such as carbon, biodiversity credits, or visitor fees and tourism revenues. Next slide. So in order to put together these packages, we need to address three main questions. What type of solutions need to be deployed? Who can invest in them, given that multiple players need to be coordinated, and how can such investments be funded? Next slide, I will talk to you about how we're addressing this at the Nature Conservancy, which is typically through a water fund mechanism, which can be described as a blended finance mechanism. Water funds are organizations that create and enhance, provide a financial and governance platform to mobilize investments in upstream catchment management. So this is what you're seeing here. We created the first one in 2000 in Quito, and have since applied that model in 41 locations in Latin America, North America, Africa, and Asia, and are working on more, including in Europe. Next slide, I will talk to you about the specific case of Cape Town, which, as you know, is direly in need of resilience. This is a picture from a dam in 2018 at the end of a 3-year drought, which was one in 100 years event, just prior to the city declaring the risk that they would run out of water in April 2018. Next slide, please. Thankfully, Cape Town avoided day zero because they took a number of very drastic measures in terms of tariff reforms, in terms of demand management, communication, and some investments in infrastructure. But critically, their dependence on surface reservoirs remain. And the problem here is that these surface reservoirs are capturing less water because a lot of water is captured before they reach the reservoirs by the roots of invasive species such as pine, acacia, and eucalyptus. Next slide. So the nature-based solutions that can be worth investing in is to remove these invasive species, to preserve the water resources and restore the biodiversity. Here on the right, you have a picture of the native vegetation, fynbos, and local flowers, which are very much respectful, if you want, of the water resources because they have shallower root system and therefore absorb less water. Next slide, please. So what we did, and the earlier presenters mentioned the need of having a robust business case in order to mobilize finance. This is precisely where we started. So the city of Cape Town invited TNC to work in partnership in 2016 at the height of the drought. And we started during that time at looking at where these investments in nature-based solutions could generate greater return on investment. We estimated that 2/3 of the catchment was invaded, but some areas were more invaded than others and had greater potential for spread. So we identified 7 priority subcatchments where removal of these species would generate greater return on investment. Next slide. And we found that, in effect, focusing on these priority subcatchments could save 2 months worth of water per year at 1/10 of the cost of the next priority option or the next investment option, which is to build a desalination plant. Of course, the increase in yield is over time. This is what you see on the right-hand side. And what is important to see as well is the profile of cost is very front-loaded, but it also has a very long tail because it's important to continue investing in removing the spread of these natural species. So it sets a very interesting investment pattern, which calls for specific type of funding streams. Next slide. So the second question is who can work jointly on that? And what we did back then is to set up a steering committee as an intermediate governance structure. We provide the secretariat and coordination for this and brought together multiple actors, including public actors from the local, regional, and national level, the private investors and private contributors, such as Netbank, PepsiCo, Remgro, and Coca-Cola, and also other environmental organizations. This allowed us, next slide, to look at how the funding could be mobilized in order to fund this intervention. What we found is that the private investors have been willing to contribute upfront to finance this this massive investment program, clearing program that is needed at the front. But that has enabled to leverage some funding from the city and from public sources for the next 3 years in order to carry out the majority of this investment. Because the case, the business case that was prepared was sufficient and enabled to convince the city of Cape Town that this type of investment is worthwhile. Interestingly, when we started this analysis, we were looking at whether or not it would be necessary to generate loans and to mobilize repayable financing. But what we found is that given that it's a relatively small-scale investment, $25 million over 30 years in NPV terms, mobilizing repayable financing was not necessary. So the mobilization of public funding was enough, if you want, to fill in the gap. That's an important finding. But what we found as well is that we will need more continuous funding after the 3-year commitment of the City of Cape Town to support the ongoing clearing and the limitation of the spread. Next slide. So the financial modeling, if you want, has also informed the definition of a long-term governance model that is appropriate in the case of Cape Town. What we found is it would be better to have a special purpose vehicle, so an institutionalization of the fund, so that they can have a formal structure, pool capital into a single entity, and continue this long-term planning that has been very important in order to attract funding over time. Next slide. This planning structure, this water fund, institutionalized water fund, can also work on developing a series of tools, such as this decision support system, which is critical in tracking implementation across multiple actors. So some implementation is done by the fund itself, some implementation continues to be done by others, but this single structure can really coordinate the actions of these multiple actors, track results, and coordinate as well with the M&E system that we have put in place in order to look at the impact on hydrology and biodiversity. Next slide and final slide. So in summary, I would say that in terms of blended finance strategies, we found in the case of Cape Town and many other water funds where we work that philanthropy funding can play a truly catalytic role for financing nature-based solutions, because it enables in identifying investment needs and defining investment programs based on solid business case, defining a sustainable funding strategy over the long term, defining the long-term governance arrangements, carrying out the initial demonstrative investments, and establish robust M&E systems. This is a mix of philanthropy funding and private corporate payments, I would say, which is not pure philanthropy because they stand to benefit from improved resilience of the water system. But this private funding has provided a very strong basis to leverage the public funding in that case from the City of Cape Town through water tariffs. So this is what we found in the majority of the cases where we're playing, that where we're working, that the majority of funding is still coming from public sources and tariffs, but the ability to mobilize them is based on philanthropy and corporate social responsibility payments. We see that leveraging repayable financing will be the next significant step. We are hoping that this would be necessary, if you want, in Cape Town to prove what can be done in terms of leveraging repayable financing. But the conclusion of our analysis was that in that case, it was not deemed necessary and actually was rejected by local stakeholders. We keep looking for other cases where that might be the case, and Europe, where I'm working, is looking to provide a very strong ground for this investigation. So the final slide is my contact detail. If you have any question, I'm happy to answer them and to send you further documentation. Thank you.
Thank you very much, Sophie, for this very complete and interesting case. We're going to follow through into the third case. So we're going to pass to the French Development Agency's case study focused on how blended finance can structure private ecosystems, a case taking place or based in Cambodia. You may be familiar with it if you're familiar with the OECD's report, Making Blended Finance Work for Water and Sanitation.
You hear me?
You have the floor, Clément, and we can hear you perfectly. Just one moment. Up. There we go.
Thank you very much for this invitation. I will try to go fast and to make this presentation in only 10 minutes. I think it's feasible. So I am working at the French Development Agency, and we will present today an experience that maybe you know, as Adriana said, as it was a study case inside the OECD publication on how blended finance, making blended finance for water and sanitation. Just for next slide. Just for remind for those who don't know AFD, it's the French Development Agency. We are working in 109 countries currently, and we have on the field of work 85 agencies on the field. Today we have 2,500 staffs coming from 80 nationalities, and we are operating since 1941, so close to 79 years. We operate per year 3,600 projects, and last year we have committed about 14 billion euros. And only on water and sanitation sector, 1.3 billion. So we will move next slide on the case regarding the private entrepreneurs in Cambodia. So I would like just to present the context because it's quite a specific context, and to understand after the blended finance mechanism, it is important to move back and to understand what were the key elements of the context during the project preparation and also the project implementation. So in Cambodia, there is an historical, it's quite specific, spontaneous characters of domestic private entrepreneurs that have invested spontaneously inside the sector since long time, 20 years. The first entrepreneurs invest in pipe water supply systems in 1986. The volume also is important because between it's not clear because there is some are informal and some are formal. About and from 300 to 400 domestic private entrepreneurs that have invested, and this is the most important case, without any coordination with states, with the government. They invest in also a specific location, small town. It's a small city that contain from 500 to 5,000 households, where socioeconomic characteristics are changing. There is an increasing of the capacity to pay, and also the water demand is changing because most of the households would like to have tap water. The four main things inside the context, it's the massive investment, private investment that was made. It's from 10,000 to 1 million per location. In pipe infrastructure, it's not the case in kiosk. It's quite different here. It's a traditional pipe water infrastructure. And these investments were made from private equity, informal debt also, and about the studies show that around 32 million USD were invested through this form between 2003 to 2013. And the last point, it's the financial viability. Their model is totally full cost recovery through the water tariff. Next slide. I would not discuss all of the constraints that were encountered by the private sector. I will focus only on two main difficulties. The first one is the limited access to commercial loans due to a risk aversion of financial institutions, national banks, international banks that use also only mortgage as a collateral, and finally there was a maladaptation of the financial project. I put a figure to make the difference between how to finance infrastructure sector that is characterized by upfront investments, natural monopoly characteristic, long dive debt structure, and also medium and low sector rate of return, and the previous financial product characteristic that was characterized by high level of collateral. Only land title were accepted as a collateral, and the level of this value was between 150 to 200%. A short maturity term of the loans, 2 to 5, and a too high interest rate to finance water supply between 12 to 14 per year. Next slide. The second main difficulties also faced in Cambodia was a lack of business development services, what I call also private ecosystems, that increase the risk for any financial institution to finance a private entrepreneurs. Indeed, there was an absence of national engineering and consulting companies that can ensure business plan preparation, design, and construction work supervision, and also the capacity building. As a consequence, absence of business plan means no transaction with the bank or not based on the water supply activities. There was previously transaction between private entrepreneurs and commercial banks, but they were based only on their house or their price of lands, and not finally on the water supply activities. It means also low quality of design. Over investment was common and is common in Cambodia, increasing also the OPEX cost. There was also low quality of infrastructure. Civil works, construction company were often wrongly managed. And at the end, it's the quality of the supply service that is low, and water quality standards were often not reached. You can see 3 pictures. It was taken 10 years ago to see exactly what was the quality of the infrastructure. Next slide. The project that were implemented, because now it's ended just last year, it was an objective to incent local banks, FTB, foreign trade banks, to finance water supplies through a blend finance mechanisms. The first main things was to adapt and to create a new financial product dedicated to finance water supply. So I can describe like that. There was a non-sovereign loans concessional from AFD of 50 million credit line to the foreign trade bank, and also using of a risk sharing guarantee of 5 million that can be applied for individual loans or on the portfolio of loans. And you can see on the table just below the difference between the two financial products. Before, the interest rate was high, after to 6 to 8. The maturity of the loan, 5 years at the maximum before and 10 years after. The collateral used, and I think it's the most important things in this project, it's the change of the nature of the collateral, moving from only mortgage, land, house, to mortgage, water supply, asset value, and also the NPV of the company. Grace periods was improved also from 6 months to 1 year. And also two things that are important. It's before, during the loan application, there was no requirement from the requester. And hereafter, business plan, asset valuation, and NPV were required. And on the disbursements method also, if it was upfront before as a normal loans, after it was based on an accredited consulting company. The loans part was mixed with 3 kinds of grants coming from different sources. The first grant was dedicated to finance the TA to the FTB bank that was managed by Enclid, a private consulting firm, in order to support the bank to structure commercial technical skills on water supply, and also to improve marketing and communication, and also environmental and social monitoring. A second grant, co-finance, we can say that, between EU and World Bank in order to support the private entrepreneurs. This technical assistance was implemented by GRET and several stakeholders in order to support business brokering, consulting service to prepare business plans, transaction, and to ensure also the technical studies and the construction work supervision. And the last grant, provided and financed by EU, it was to encourage private entrepreneurs to reduce the cap cost of connecting poor connection, and also to improve the water quality. You can have a look of a whole financing structure between World Bank, European Union, and the French Development Agency. I just readapt a little bit these figures from the OECD publication, focusing also on the roles of the TA on the private sector structuration. Next slide. Yes, thanks. So what are the results and the impact? So almost 10 million of the 15 million, because there was a part to finance also electricity sector. So 10 million finance water supply, and the 10 million were drawn down in only 3 years, between 2015 to 2018. So in terms only on water supply sector, what is interesting is that there was a huge number of loan application requests that were made by private entrepreneurs, almost 62 projects submitted, and 30 projects for finance. The average loan amount is quite small and quite variable, because there is the average loan amount, it's 250,000 USD, and the amount of the loan moved from 15,000 to close to 1 million. The key impact, you can see also the two figures on the right. The first, and it was expected, it's an important change in project banking analysis on the collateral, allowing an increasing of project investment, because in improving the kind of collateral, the project investment total amount is increasing and is more in line with a normal infrastructure project financing. So the bank has used all of the possibilities to make the guarantees. There is also a second part. It's a quite drastic improvement of the infrastructure quality due to the TA mobilization, where close to 500,000 of households have an improvement of the water supply service quality. and also close to 100,000 people that have an improvement of that have a new access to the water supply service. Also, another things, it's that loan not only finance infrastructure, the funding of the loan finance also technical assistance and contribute to structure national and private ecosystems. So what were the key success factor? And finally, I think we are in line also with the first presentation. The key success factor are, for the first, it was not expecting because there was a changing institutional environment at the starting point of the project. Important change were done in water tariff policy, water laws, licensing process, and this have contributed to de-risk also for the bank these projects. There is also an alignment of three major donors. There was an historical coordination between World Bank, AFD, and EU on a similar roadmap regarding the access to finance program for domestic private entrepreneurs. There is a third key success factor. It's the strong interest in this project of the Foreign Trade Bank. This bank has a strong motivation, and during all of the project, top management follow up all of this project during the implementation. And the last, it's the TA structuration and the importance of the technical assistance, both for bank and for the domestic private entrepreneurs. Next slide. I try to, no, the last
there
one.
We go. Clément, if we could close this in around a minute, that would be perfect. Thank you very much.
The lesson learned, it's the first and the main, it's blended finance mechanism and project. It's quite complex in order to prepare and also to implement, but this generates really strong impact. The first lesson, it's as Julien from 1000 Fontaine said, it's project preparation using blended finance approach take times to identify proper financial vehicles, FTB in this case, take times to design properly the project support and the TA. As an example, this project started what we call at AFD in instruction in 2009. So we have to 4 years to prepare this kind of project and to start the project in 2015. The second lesson learned, it's de-risking is not only guarantee. TA is essential both for financial institutions and for sectorial actors. And they are a major prayer to build confidence between private entrepreneurs and a bank that is not a specialist in a water supply sector. The third lessons and the complexity of implementation. These kind of project generating a lot of transaction costs, especially in that case, because as you see, the loan size was quite small. It's called between microfinance and normal finance. We are exactly in the middle missing. And this can be reduced by using intermediary national actors, business broker, for example, it was used in this project, or in the standardization of most of the process loan application. And the last lessons, it's blended finance can drastically improve private sector ecosystems also by establishing entry barriers on the access to finance, on technical studies and business plan, by creating new markets and opportunities for national actors. And so a clear capacity building strategy for such actor is essential. Thank you very much. If you have any question, you can ask.
Thank you very much, Clément, for trying to keep your presentation at around 10 minutes, but still going into quite a very good level of detail. We're going to try to connect with Kathleen. My sincere apologies to everyone for the slight technical difficulty we had at the beginning.
Thank you, Adriana. You can hear me now. I think my microphone is working properly, and if everyone can hear me, that's great. So my apologies as well for the technical glitch. Even if we had tested that multiple times, those things happened. So I'd like to, while we're waiting for the slides, I'd like to just thank French Water Partnership for putting together this very timely discussion on blended finance, which has been a topic of real interest at OECD and more broadly as well. And it's so great to hear some of the newer developments and the very specific case studies and practical approaches. I think that's excellent. We had designed this presentation as a bit of an introduction, but in fact, I think it might work just as well as a bit of an attempt to draw together some of the cross-cutting lessons that we heard across case studies as well, which certainly resonate with the work that we've done at OECD. So basically, just to kickstart the points I'll present, just to highlight the definition of blended finance that we use in the context of OECD, which is quite a broad one and encompasses, I think, also what we heard from the case studies. If we go to the first slide, the definition we use is really the strategic use of development finance, whether that's public or private, to mobilize additional finance towards sustainable development in developing countries. And that additional finance typically refers to commercial finance, whether that comes from a public or a private source. As we also heard in the case studies, there's a real diversity of approaches and instruments that can be used in blended finance. So we're not talking about one specific approach, but there are a number of different instruments there. And some of the key types are noted here on the slide. And basically, the combination or use of those instruments really are aiming to mitigate risk and find ways to pool or crowd in multiple sources of capital. If we go to the next slide, we can have a quick look at the current state of play with regard to mobilizing private finance for the sector. This is based on OECD data, survey data, and basically shows, if you look at the pie chart on the left side, that the mobilization of private finance for the sector is really quite low. A very small share of the overall private finance mobilized by development finance compared to other sectors. So this is data from 2017, 2018, and basically reflects that about 2% of that private finance mobilized across all sectors were for the water sector. So there's, of course, a real potential for increasing and scaling that. Now, in terms of instruments, I mentioned there's different types of instruments that can be used to blend. And in terms of the typical instruments used in the water sector, we see the use of special purpose vehicles and direct investment in companies, commonly used in accounting for about 70% of the private finance mobilized, with guarantees following closely after. And in fact, from the data from the previous years, we've seen guarantees have a very prominent approach here. If we flip to the next slide, I just want to highlight a couple of key takeaways from our work collecting a number of different case studies. In fact, the case study from AFD is, of course, part of this report as well. And what we did is recognizing that water-related investments pose very distinct challenges and opportunities for mobilizing finance, really depending on the subsector. So we looked at 3 different types of subsectors within the water space, and the case studies we already heard today, I think, are good illustrations of some of the differences you see across that landscape. And just to highlight a couple of the kind of very high-level points that came out of looking at that range of different case studies, looking at water supply and sanitation utilities, notably borrowers have quite distinctive financing needs, and in particular need for long tenor finance. And we saw that utilities that are moving towards creditworthiness, who are either already creditworthy or even just kind of on the way there, can benefit from well-targeted blended finance strategies, for example, supporting targeted approaches that help them improve their operational efficiency and financial sustainability, that can help them increase their creditworthiness and provide a sort of phased approach that can support that transition toward mobilizing commercial finance. And notably, that takes time. I think Clement mentioned that a couple of times. In terms of instruments, we see guarantees, and of course, the role of technical assistance is very, very important here. We also heard that from the case studies. And that TA is important on both the borrower and the lender side. So also for working with the finance providers, but also those who are looking to borrow. In terms of the next subsector, this is small-scale off-grid sanitation. And the first case study was a very good example of that. What we saw in our work when we reviewed this last year is that really this blended finance models were very early stage, either not unlocking commercial finance yet, or still at a very early stage. A couple of the things that we thought could be interesting pathways forward was really having an integrated business model that brings together some of the revenue generating parts of the value chain there and combine those with some of the parts of the value chain that have traditionally relied more on grant financing is very important. And just maybe two final points here is that with regard to multi-purpose infrastructure, we see here special purpose vehicles are a very common approach, well known to commercial investors, and landscape-based approaches can pool funding at a specific spatial scale. So typically what we've seen so far is mostly combination of public funding and philanthropy, as noted by Sophie, and much less mobilization of commercial capital. Now my time is nearly up, so we can go to the next slide. And I just hit on a couple of cross-cutting policy implications. You can put that text up, and this can be food for thought also for the panel. But we would emphasize the importance of the enabling environment as opposed to just having one-off transactions for blended finance. This focus on transparency and measuring and monitoring is really important. Also, there's broad opportunity to build on existing experience and adapt them to new investments and contexts. And finally, I'll just point out that there's a real need to strengthen coordination among finance providers in given markets to avoid crowding out. Now, I went through that quite quickly, but I'll leave it there and look forward to the panel discussion. Thank you so much.
Thank you very much, Kathleen. Apologies once more for the technical mishaps. Thank you for this excellent primer, which came after the case studies, but it served us just as well. So thank you very much. So as Kathleen was mentioning, she was mentioning the enabling environment, which leads us in very nicely into the part 2 of our webinar, which is the moderated virtual roundtable. One of our speakers, I believe, will be highlighting the importance of an effective enabling environment for blended finance. So without further ado, I'm going to open the moderated virtual roundtable, which will be moderated by Regina Rossman, Associate at Convergence Finance. And around the table, we will have 3 speakers, Mr. Almotaz Abadi, Managing Director at the Union for the Mediterranean, Brieux Michoud, Managing Partner at Waterpreneurs, and Mr. Chris Severin, Head for International Waters at the Global Environment Facility. So apologies for the run-on in time, but I hope that Regina will not be too angry with me with that, and that we can manage to still have a good 15 to 20 minute roundtable. So Regina, without further ado, I pass you the floor. Thank you very much.
Thank you very much. So since Adriana already introduced who's with me today in the panel, let me jump right in. So from Convergence Finance's perspective, we have seen that blended finance has taken off in the climate space. There's plenty of examples in the climate change mitigation space. For example, Climate Investor One, which is one fund managed by climate fund managers that has really achieved mobilizing additional finance at scale for climate change mitigation. Unfortunately, we don't have the same trend in the water space yet. And so my first question to the 3 of you is, what is your organization's role in blended finance? And what are you doing to create more blended finance solutions or to help mobilize additional finance for water and climate? So Chris, may I ask you to go first, please?
Sure, of course. Thank you so much. And thank you so much to the organizers and everybody also participating today. It's always wonderful to be able to talk about this very important issue. Well, from the perspective of the GEF, the Global Environment Facility, we have been part of the financing scene for close to 30 years. We are not as big as the banks or as we heard, AFD, but we have a considerable amount of money, around $100 million a year, roughly just for the water bit alone. And then you add, of course, both climate mitigation and adaptation funding. So we have $4 billion for 4 years, roughly. That's the replenishment size. So what we've been trying to do, we've been, for example, working with Convergence, with yourself and many other partners on blueprints, trying for teasing out what are the issues needs to be addressed in order to get more blended finance, both the public and the private sector financing. But I mean, blended finance in my world is also just where we get different kinds of donors to blend financing. It's not as true as it may seem. I mean, getting bilateral funders and multilateral funders together on one agenda, getting it, for example, having AFD and maybe the World Bank or AFD and the GF or whoever it is. It could be many different kinds of bilateral donors with multilateral donors. It's not a trivial exercise because we all have different systems we have to coordinate. There's different deliverables we have promised our politicians in the background, or in our case our donors. So there are always these different things that makes it not so compatible, even though it seems from an outsider, as we heard our first case today, it should be fairly simple, just do it. But it's not that simple. So it's not because we don't want to do it. There's also a matter of scale here, right? So when we work with the waterfronts, for example, that we also invest in. But primarily we started in Latin America, but now it's broadening out. These are great examples of local level engagement, where we actually are able to facilitate private sector, public sector coming together, investing in nature-based solutions. So I mean, that's a great example where you get to the actual resource users right away. Often what my investments are most of the time working on the policy level between countries, trying to facilitate cooperation on water and water frameworks. How do you make sure there's water enough for all the different parts of the nexus within each country on a shared freshwater system? It's not. It's really interesting, but it's not something that happens in a day and a half. It takes a long time to negotiate these things. So then of course it's frustrating when you're sitting on the ground saying, why are you spending so much money on these top level policy discussions? We do that because it's really important. If countries do not agree, it's really hard to see these things trickling down to get actual impact on the ground. That's not said we shouldn't do the ground stuff. When we do that, we do it in wastewater, freshwater, and so forth. Sorry, I don't want to monopolize the whole time.
Thank you very much. That's very important that you mentioned coordination and bringing the different stakeholders to the table. That's a really important feature for blended finance. So Brio, if I may hand over to you, what is your organization's role with regards to blended finance?
Thank you, Regina. So Waterpreneurs is a small organization based in Switzerland. And our objective is basically to cover what you just said, meaning putting around the table all the stakeholders that can have an interest in scaling solutions in the field of water nexus at large. I mean, water for drinking water, wastewater, but more largely water for food, irrigation, etc. And so water entrepreneurship and market-based solutions, and investors and financiers of all kinds. And our activities are focused basically on accelerating and playing the role of a catalyst to accelerate these solutions in the field. And practically, we do that by acting around three different lines of services. The first one is, we call it assess, and is about the identification of entrepreneurial ecosystem and players that are in touch with market-based solutions that can be project that can receive potentially finance or blended finance. The second one, we call it connect, and is everything about making sure that there are some opportunities in the field, in country, for these stakeholders to meet their peers, to meet investors, and to meet the enablers of the local environment, so that this transaction can happen. And we do that through what we call marketplaces, called Innovate for Water, in which all of these stakeholders have an opportunity to present what they do to the audience, and then deals can happen on a one-on-one basis. And this basically answers the points that were raised in the case studies, such as the need to pitch to a wide audience, the need to share experience about business models, the gathering of the fragmented ecosystem of investors. And so everything we do is really to try to address these needs. And the third pillar, we call it scale up at Waterpreneurs, and it's about, once you have entrepreneurs and you have market-based solution, they had the opportunity to connect and to do business together, to identify who's doing what. We help them scale by promoting what came out of these marketplaces through innovative finance vehicles, for example, or through the catalyze of strategic coalitions that can accelerate in practice the solution in the field.
Thank you very much, Priya. And it's important that you mentioned that these people have to learn to speak the same language. We heard that before as well. So I believe that Waterpreneurs plays an important role here to bring these people together and make them listen to each other. So over to you, Almutaz. What is the role of the Union for the Mediterranean?
Thank you very much, Regina. Thank you very much for my colleagues, Grace and Pro, to be presenting their work. As a Union for the Mediterranean, as you know, we are an intergovernmental organization. We are not a funding agency like Jeff. We are not also implementing agency like our great friend Waterpreneurs. So our sole work is to enhance cooperation among different actors in the Mediterranean, which absolutely everybody know that the Mediterranean is one of the hottest spots where we face a lot of difficulty when it comes to the water access and water availability. 3 of our member states are classified as the poorest in terms of water resources availability: Jordan, Malta, and Libya. But at the same time, none of them on the list of the poorest water supply because of the wealth and knowledge in the Mediterranean based on the North-South and South-South cooperation. This gives us a role at strategic level. As known to everybody, the Union for the Mediterranean, we are doing political, policy, as well as a financial engineering among our partners. The partners are a variety of partners: governmental actor, non-governmental actor, youth organization, as well as private sector. So our goal, when it comes to some example, like when it comes to the Gaza Desalination Facility project or for Bezert or whatsoever, is to guarantee the political will about such a project and how this project will enhance the general socio-economic and the cooperation among member states. And we play a role that we want to, as an enabler, providing kind of policy recommendation, as was very clear from the 3 presentations, that if we don't tackle at 3 fronts the issue, the blending finance will not be going well, which is the communication, building awareness, as well as the governance, long-term governance and institutional arrangement, which guarantee a very clear role for the private sector and the private equity funders to engage with the private sector, because if we don't build this at policy level, we cannot succeed. We will have some haphazard example. In the Mediterranean region, we have a good example to be replicated, but unfortunately, it requires a lot of efforts in order to enhance the policy framework, the regulatory framework, as well as enhance the knowledge and communication with the private sector, how these projects, how their contribution can be also with return. So our goal as a Union for the Mediterranean is to work on this knowledge product, is to make better understanding of blending finance and climate finance to the Mediterranean, identify also some trends, how this gap in the water sector need to be filled by building synergy among different actors, including the public, private, as well as different banks and different financiers. And this, we tackle it on a more strategic level, which is, as an example, we have developed during the last 2 years the UFM financial strategy for water, which one of the most important things is to look after new and to leverage a new and innovative way of funding to the water sector in order to bolster such important pillar of the socio-economic development in the Mediterranean. Private sector was called many times to participate into the development of this policy framework of action related to the water. At the other front, we have the water, the climate finance strategy, which also identify key actors and also give a better understanding for some of our member states and other partners in order to engage. One concrete example is the R20 for the region climate. It was very, very important. The UFM Secretariat had helped politically to put this into frame. At this stage, the Union for the Mediterranean, based on the political mandate, we are working with the Global Water Partnership and their branch, Mediterranean, in order to launch more concrete partnership in the Mediterranean to enhance climate fund to the water sector, including all different pillars of the funding to the water sector. But the key challenge that we face if we cannot prepare the ground at policy and governments and regulatory level, we will not succeed. At the same time, we need to also communicate and better aware and train those people. And this is what we are trying to do.
Thank you very much. And if you could post a link to the strategy you mentioned, that would be great. I'm sure a lot of people in the audience would be interested to read further. Now, let's jump to the next question, since I'm conscious of time. If you could all share what you have learned from a previous blended finance transaction you have involved in, and also tie that back into your main takeaway from this session as a whole. To give an example, at Convergence Finance, we often see that blended finance transactions take a lot longer to structure and launch than the organizations initially think. And so half a year can fly by very quickly. And maybe it makes more sense to leave yourself a 1 year or 1.5 year timeframe from the onset and still work with all the stakeholders together. Because when you face the perceptions of risk from the private investors in particular, you may notice that the due diligence and some of the negotiations may just take longer. And that's something that I have heard as well from the 1001 Fontaines and also from Safi Sana, where they said the transaction costs are high and it takes a long time. So that's one thing that I took away. Chris, what did you take away and what is your learning from it?
I hear you on the time, right? But at the same time, I would say, to me, it's not such a big issue if it takes a little bit longer. I rather want to do it right. And so we often get blamed at the GFs that we are slow and there are many things wrong with us, but we still get money out in a fairly succinct way, and we do it over a fairly narrow timeline compared to the fact that we are working with taxpayers' money here. And so, since we are working with public funding, I think it's really important. And many of these actors in the call today, but also in general, are working with some sort. They're working with other people's money in some way or form. Either it's private sector funding, or as a philanthropist, you also work with somebody else's money sometimes, at least if it's not your own philanthropy. So time to me is not just a big deal here. I think it's much more important we get it done right. And I hear the frustration on the ground. But I mean, I work with a big private sector company. It took 4 or 5 years, and that was not because of slowness on our side. It was simply just the way the negotiation for this big private sector company to meet with our goals and the other way around for them to understand us. It was a long exercise. It took a long time, but it actually went out to be a very, very nice partnership that then, due to other reasons, did not actually come to fruition. But we have a very concrete example from private sector bank lending from the GF, went to capitalize 4 different funds on wastewater treatment in the Caribbean. This is not something we normally do. Our money is normally not going into to secure private loan financing, but that was the way of this deal that was structured. It took a while to get it done, but I mean, it's been very successful and has now been replicated in more Caribbean countries. Also working with GF grants, but also loans from ADB or IDB. Sorry. So this is a concrete example. I'm not sure how much more time I'm going to get, so I'm just going to make a final note on this. So because this is a big issue, private sector or this blended finance, this public-private sector financing windows. So the GF is currently working on a private sector strategy. It's very close to being finalized. We've also raised a lot of interest from private sector. So there's now going to be some kind of panel, a private sector advisory panel to the GF as well. Because this is one of the ways we need to break down these different barriers. And I tell you for sure, it's not because of lack of will. It's mostly because we talk 2 different languages. And it can be very frustrating feeling like the dumb one that I do once in a while when I hear private financiers speak. But then if we speak conservation language, it also can be a little strange to the other crowds. So I think there's simply we need some kind of vocabulary or a kind of a dictionary on how to cooperate. So I think communication is one of the best tools to break down these barriers, and we just have to keep at it. It takes time, but there's a lot of willingness to act both in the public and the private sector. So, I mean, yeah, keep on talking.
Thank you very much, Chris. You're raising a very good point here. Communication is key. Over to you, Priya.
Well, one of the key takeaways I get from the case studies, beyond the long time that is needed to structure a blended finance deal, and beyond the communication needs that is just highlighted by Chris, is the need for projects, entrepreneurs, to de-risk the investment. They are perceived as being risky, all right? And there is really a need to reduce this perception of risk, and probably to consolidate also the sector and the understanding that financiers and projects have of each other. So probably a way to there are different ways for de-risking investments. First of all, education and understanding of who's doing what. I mean, if I understand what you're doing, I have a better sense of the risk that you represent for me. Also, pooling of projects into vehicles that can, de-risk, because you don't, as we say in French, you don't put all your eggs in the same baskets. And beyond that, well, blended finance transaction, putting together private players and public players can help de-risk, because there's a need for a better understanding of who's doing what. I mean, the private sector will try to understand what the public sector is willing to do, and vice versa. And so it's, in my understanding, this type of solution can help de-risk. There is a need for greater understanding of the offers and the needs of the various stakeholders in a given ecosystem. Blended finance transactions are complex, and there is a need also to understand that there is an upside for all the organization. I think the case from Sophie Trémollet was very clear on that, looking at the different benefits for the different stakeholders. Yep.
Thank you very much. And thanks for remaining positive as well. You are right. In the end, we all benefit from cooperating in blended finance transactions. Almutaz, over to you for some closing remarks, and then we are going to move right into questions to all the panelists from this roundtable, but also from the case studies. So Almutaz, your major.
Thank you very much. Actually, I was very, very happy to hear this case study, because it will help us in order to disseminate among different actors in the Mediterranean. One of the key lessons that I had learned today from the case study is that how we can structure the commercial debt when it comes to the blended of finance. And I learned also from this exercise, and also from the exercise from Jordan, which is Al Samra, which is almost 220 million US dollar project. Half of it was from private equity, that we need to focus to build the institutional aspects. If we couldn't build a commercial non-profit entity, as an example, for the Al Samra wastewater treatment plant or for the project, we cannot draw this fantastic relation between different actors. When we talk about donors, we talk about local money, private bankers, as well as some money coming from different green climate funding or other resources. You need to see how these relations work in terms of commercial debt and in terms of revenue line for the private equity. Because at the end of the day, we have the social corporate responsibility. We try to be responsible, but at the same time, we have to be responsible for our employee as a private company in order to give them salaries. So we need to look after the profitability also of the investment return. So any government, any entity want to bring this, they have to be clearly identifying all of these institutional aspects on a very clear, crystal clear manner. Otherwise, we will stay, as I said, haphazard.
Almutaz, that's a very good point. And that's something that we as the development practitioners are not very good at, talking about financial returns and the risk return profile. So that's certainly something we all need to learn. All right. Thank you, all three of you, very much for your very helpful insights. I'm sure there will be lots of questions from the audience. So I'd like to hand it back over to Adriana Salazar, who will moderate.
Thank you.
Yes. Thank you very much, Regina. Thank you, Bria, Abed, Almutaz, and Chris for this very nice exchange. I think we were running a bit over time, but I think Regina managed to kind of touch on all the points that were foreseen. And I think some rather interesting points were made. Also kind of summarizing your different points of view on the case studies and so on. So we are running a bit late, unfortunately. I would like, however, if everyone is okay with that, to just go through maybe a couple of questions that we've received. We won't, I don't think we'll have time for much more than that. Let me see. So perhaps one, I'm just going to switch on my video again. Well, I think this will be done in due time. I have received one question, for instance, for Sophie Tremollet, who I believe is still on the line. So I'm going to read it out. I don't see from who it's from. The person asks, how do you think we can best leverage repayable financing of nature-based solutions? Do you think showing the cost effectiveness of MBS, of which studies are still quite rare, in France, for example, is the key, or are there other areas where we should be focusing on too?
Thanks a lot. Yeah, I mean, definitely the cost effectiveness is one factor, but there are quite a lot of studies on this now that can be mobilized. Effectively, I think one of the key issue I would say is the governance is related to the governance arrangements. Who would be the borrower for a repayable finance loan and who would be the implementer? Because given the multiplicity of benefits, this is an area that we are struggling with, even in the European context, I would say, where there are water companies, for example, that can be borrowers and that actually are mobilizing repayable finance for that. So there is the example of Anglian Water, which has launched a very large green bond program, and much of that is going towards funding its investments in NBS. So it is possible to do that, but unless you have a clear agency that is willing to invest in NBS, it can be more challenging. Hence, also the need for establishing these special purpose vehicle or water platforms that can borrow. But for that, they also need to build a credit history or have a strong backing from an entity with a credit history. So it's work in progress. I don't think it's impossible. But there are quite a few challenges to address apart from the cost effectiveness of the investments, which is, can be demonstrated. I think it's not easy, but it can be demonstrated.
Adriana, can I add a point?
Go ahead, absolutely.
Thank you. So I'm hearing exactly what you're saying there, but I'm just wondering, so one of the things we see in our portfolio is we do have a lot of the data. Countries have data, and if they don't, we will assist them in that process. But what often happens is that when you have scientists sitting, coming up with the rigor and the scientific understanding of ecosystems, it's extremely hard to get them to put a value on the ecosystem services. And if we could just put, I mean, if people would be a little bit more bold, including myself, but I think everybody, if we could just, if we were bold enough to tell our politicians, okay, if this ecosystem costs this, and if you do this solution compared to, I think sometimes this being able to compare in a dollar amount or a euro amount or whatever it is, it informs political decisions. Unfortunately, as we all know, I mean, when you have a dollar value or whatever, to compare different solutions, either nature-based or gray and concrete solution, if you will, that's when you get politicians to pay attention. So I think I think we need to be a little bit more bold, all of us, when we do our communication. So it's not only about, are we going to save this ecosystem or we're going to save the biodiversity, which is important, but when we want politicians to pay attention, I think, and also financiers, if we can tell them, we have done an evaluation of this and an evaluation of our system, this solution will cost this will cost that, then we might be able to push to see more green investments if we do that. But it takes a little bit of boldness. So that was just a comment.
Thank you, Chris. Let's see if we can get a couple more questions in before we close. I have a couple of questions directed at Mille et Une Fontaine. Sorry, yes, exactly. Sorry, apologies. Directed at Safi Sana. Let me just check exactly. Let's see, because we're dealing with questions from several platforms. Exactly. So a question directed at Art from Safi Sana, Caroline Figueras, who is asking, to which countries are you willing to extend your activities currently? And she asks a second question. Let me just check. Or perhaps if you would like to go ahead and answer that one, and I'll identify the second one. There we go. Yep.
Yeah, so currently, so we are looking at expansion within Ghana, surely because we have a big team there. And we are investigating the market in Mali, Uganda, and there's an interest from Ethiopia as well at the moment. I mean, there's more interest from multiple places, of course, but we have to look at the viability, etc. So yeah.
Okay, got it. Thank you. Actually, I'm seeing another question from Caroline Figueres, again directed to Sophie Tremollet, and we'll get back to Art briefly. She asks, in the case of the Cape Town case, how much money did you manage to find to feed the fund, and how much work has been implemented in the 7 priority subcatchments? You may have answered, I think, that question. Would you like to elaborate a little bit more, or?
Yes, so what I identified is that there was a need for $25 million in NPV term to be raised. And this funding, most of the upfront funding has been mobilized. There is an issue, of course, with private funds, which come in small installments and get a lot of effort in a way to mobilize. So that's why we are grateful for the City of Cape Town to have assigned regular tranches of money in the next 3 years in order to pay for this upfront cost. As I mentioned, what is still an issue is the funding of the maintenance costs over time. And one of the problems here is that entities, public entities such as the City of Cape Town, have issues with their budgeting processes, so they can't assign funding beyond a 3-year rule in the case of the City of Cape Town, a 3-year period, unless there is a specific sort of administrative order that is engaged with. So we still are looking at how this can be mobilized, and that's one of the reasons for establishing the fund as a permanent structure so that it can continue to receive this funding over time. In terms of the clearing, effectively, we had identified that we needed to clear 9,000 hectares per year so this is the pace at which we've been going. It's been delayed partly by COVID-19, but we can catch up. So the decision support system that I briefly highlighted is a tool that enables to track what amount of clearing is going on, because the fund does some, but other actors are still engaged. So this is also a clearing platform to clearing, not in the literal sense, but a sort of clearinghouse in order to understand who is doing what, because it can't sort of capture all of the actions. And as I have the floor, there was a question on SPV. I mean, I think the understanding what is needed in terms of financing drives in some way the governance arrangements. So we had considered in the case of Cape Town setting up an SPV that would have been able to leverage repayable financing. But because the City of Cape Town came forward and said, no, we can actually cover most of your funding gap, you don't need repayable financing, then we decided against this type of vehicle. So it's very important to consider all of these aspects at the same time and base that on strong financial modeling, I would say.
Thank you, Sophie. Exactly, and just to mention the question that Sophie was referring to that has come through is a few presenters mentioned SPV as a tool for blended finance. I would like to ask how this could best be set up, by whom, is it costly? So I don't know if anyone else would like to react to that. I believe that was a bit of a general question, and then we can perhaps close with another question that was directed at Safi Sana. So would anyone else like to react on that question?
Do we get a final round? Because I see Fuad Bate, he also asked a question, but
yes, if you'd like to react on that, go ahead.
Okay, thanks. I'll do that. So Fuad, thank you so much for your question.
We'll
thank you for being here. Good to see you again. So of course, transparent water resource management needs all different kinds of financing, and blended finance, private sector is part of it. We know that from the big to the small resource users. I mean, the big conglomerates as well as the local resource users, all of them need, and they're working many times within a transboundary context. You see that from the Orange River. We just saw the case study here from South Africa. That is, of course, it's a national issue. It's a very localized issue, but it needs to be taken into account of this broader water framework that sit within, especially the way that the catchment is shared between many different nations. And so there is a very specific need for attracting a number of different sets of financing to manage transboundary waters. Public financing can do a bit of it. And I think, the role that we have been playing so far in bringing partners together, getting these transboundary diagnostic analysis science-based and lifting it into a ministerial endorsed action plan, I think that's a very, very sound way of making this bridge between an issue that has been identified into attracting financing. So yes, there is still a need for that, and I think that unfortunately is going to be growing, not only with climate change and population growth, but also under COVID and the response to COVID that we all try to figure out what to do with right now. And I think so one of those things is there's more stress and resources, and we need to be very, very careful that there's not going to be a rollback of decades of work now as local economies, national economies, and the global economy need to expand fairly fast. So I think that's where we need to be even more diligent, both as financiers, but also as managers within this space of conservation and finance, to make sure that there are opportunities locally so people can get food and get the local financial systems up and running. But we also need to make sure this is done in a way that we don't roll back all these years of work. So I think we're in a challenging time, but I mean, that's why we need to pool all different resources in here to do this, both our minds as well as our financing and ability to do things together. Cooperation is the key word. Thank you.
So perhaps, yes, just to get to a question that has come through for Mylène Fontaine. I can't see who it's from, but the question asks, do you deal with issues related to raw water, resource allocation, for example, regarding conflicts of use with the operator of a main captage area?
Yeah, that's a very important question. Actually, we focus on safe drinking water. So in order to, I would say, maximize the impact on health, so we're only talking about 1.5, 2 liters per day per person. And as such, the water footprint is very limited. So there is absolutely no risk that we are, using water from a protected source, or that we are jeopardizing any other utilization. By focusing on drinking water, and by having a water treatment system that through a UV system that has a very low water footprint and rejection rate. And that's why I would say that we need to think about really environmental friendly systems that are resilient to the climate change effect when we set up the water systems, actually.
Is in agreement. I think we can start perhaps where it's already almost 5 p.m. We've run almost half an hour past the foreseen time. Apologies for that. Apologies for the small technical mishaps at the beginning. I think we now managed to cover 3 or 4 questions at least, which is not bad. So I would like to perhaps bring this webinar to a close, and thank you all very much for your patience and for following up in the preparation of this session for quite a few weeks and months. Hopefully we can tweak make any edits, any changes that we might want to make in time for World Water Week 2021, and hopefully have an in-person session there. Although of course we're all having to adapt, and this experience also has taught us a lot about how this type of webinar, how the interactions can be. They can also be very valuable. We've had at least we're going to let you know, confirm the final number of participants we've had, but we've had, I believe, around 250, perhaps a little bit more in the different platforms. So that's a pretty good, I think, turnout. So yes, without further ado, thank you very much, and hope to see you at World Water Week 2021. So thank you to all our speakers.
Bye. Have a good day.
Thank you very much.
Thank you so much.
Thank you. Bye.
Have a good vacation, Adriana.
Yes, thank you very much. Thank you.
Thank you very much. Thank you.
Thank you all. Take care.
Thank you.
See you soon.